What's up, guys? It's Matt with Conservative Trades, and wow, what a great day in the markets. It's continuing in the wild ride to the downside. As a matter of fact, if you guys check out S&P 500 here, the SPY just continued to get tanked. We had a very, what I would consider a superficial buy up during pre-market hours. You can see, well, in post-market hours from yesterday, pre-market hours today, it kind of started selling off, but just very light volume, very light volume. And I went ahead and marked out some of these levels that you see here, these key levels here. And, some of these obviously I got from the daily chart and made sure that they were confirming on the 5-minute chart, 15-minute chart, that sort of thing. But you can see how well these levels were respected. And I'm not so much talking about the green line. The green line was kind of where I was marking where a breakout of the pre-market, post-market highs would have been. And so, but I did mark out these levels here, this level here, and then this level down here, and then one more down here. And of course, this solid red line is where it would be breaking low of day. And so far, now it's, the day hasn't played out completely yet. It's a little after 2 o'clock in the afternoon, and so there's still a ways to go. But you can see how these lines were respected. I mean, it busted through a little down here, but then it rejected back over it. Of course, we were watching moving averages, mostly the VWAP though. It came back down through the VWAP, crushed through this line of support, came down, and this line that I had previously drawn just kissed it, and tapped right above it. Got a 9 EMA rejection, came right back down, slammed through it. Once it broke through, we went all the way down, and guess what? Kissed this level. I'm serious, guys. You may think that I marked these levels out later, but thank goodness that our live streams are available. You can go and check out the live stream from today. I had marked out these levels before this price action even happened. Okay, this is why I tell people that key areas of support and resistance are very critical to know as a day trader. Okay, and so these lines, these levels, they were absolutely respected, at least, to the downside. Now, obviously, when it came back up, now it did kiss up on the levels here and then came back, tested the 9 EMA, and finally did break up through. But pretty much at this point, we've been dealing with price movement around the VWAP. It obviously hasn't been really respecting this level at all. But again, these were key levels that I was looking for out the gate, really so that I could make a determination on how I should trade the TVIX. So now, as you see, I've only made 16 bucks on the TVIX today. This was actually from just one small trade. I think it was a trade of like 10 shares. And really what happened today, I was not actually paying attention as much to the S&P 500 as I wanted to, because I had gotten in on VIR. So really quick, before I pull that out and I show you my executions and kind of walk you through the trades here, VIR has had a very significant run up. This is another one of those stocks that gained a lot of momentum off of coronavirus type stuff. And so today I was, yesterday's candle, it had popped up and come all the way down here to these levels. And I knew that if this breaks 3608, we could see potential rundown, like all the way down here. Okay, so I actually went in here. I got in just 50 shares right here, very conservative share size. You can see my order execution, this red dot right here over this candle, is where I actually got in at the break of VWAP with anticipation of the break here at 3608. And of course it broke down through it and I gave it time to move. Came all the way down here, started to pop up. I took a little bit of profit off here, but then I decided to add again. And it brought my average down, but it enabled me to wait to where it came all the way back up past VWAP to where I would have to get out. So it brought my average down a little. It came around, kind of had this rejection. It never could make it over this 9 EMA. If you watch all the way down here, this is something we commented on multiple times during the live stream today. Again, you can go back and watch that. It is posted here on the channel. But so as it started to curl back around, I went ahead and added back in. So at this point, I probably had about 75 shares in. But it came down here. Saw this large green candle. I had set an order here, a stop order to get out some of the shares. And then, of course, I think I had set the rest of them at break even at that point, but it did get out some of those shares, but it continued to drop. So I pieced out a few more and it continued to drop. So I had a little bit of a position left and I added back into it and I took profit here and then took profit when it came back up here. So this was a really nice trade. I actually made like $400 on this trade. And this is another one of those trades, just another one of those, demonstrations of taking very conservative share size. And so you know, I made over $400 on it. Now you'll notice it says $383.75. That's because when it came over here, I saw it forming what I thought was going to be a flat bottom breakdown. There was continued weakness on the SPY, weakness on this stock, and I thought maybe it would crack back through the low of day levels and make its way down to the 50 moving average. Okay, and so to me, it was worth it to get in with another 50 shares here just to see if it could crack through. It did not crack through. It pulled back, and so I lost, I don't know, maybe $30 on that trade. So it wasn't a bad deal at all. I set the trade in there. I knew that I was working with roughly a 1-to-1 or maybe even better, maybe 1-to-2, maybe 1-to-3, maybe or 4, or maybe 3-to-1 or even 4-to-1 profit loss ratio. And so it was worth it to take it. So what did it do? It popped back, it got me out, and wouldn't you know, that's like the highest place that it's hit since. It ended up rolling over, coming down, but it still hasn't broken low of days. And so I ultimately would have just probably gotten out of that trade with just either a break even or small win. But I was pretty much on this trade that I just showed you here, the one that I took out the gates when I identified these levels here, and you saw I had marked these. I had marked these pre-market. Again, you can go and look at the live stream. I had also marked these levels because I knew that there was a potential that as it came out of the gates, it might come up here and retest these levels before falling back down. But again, we never got the retest, and I went in just 50 shares. And so on this whole first move, this was a $400 and some dollar move. So again, it goes to show you don't need to take massive share size. Now you might say to yourself, well, hey, yeah, but or you might be saying to me, Matt, well, man, imagine if you had taken 200 shares. And I actually did locate 200 shares for short. I had 200 shares on VIR today. I could have taken 200 shares. But here's what you got to think about. This is an extremely spready stock. At one point in pre-market, you're talking, it had almost a $3 spread. Okay, it's ridiculous to even think about taking share size at that. Now, yes, the gap had narrowed, but I think there was still, I think when I went in on this trade with 50 shares, I think there was still like a 50-cent spread on it. And this stuff can shoot up quickly. Okay, and so, you know, if I had went in with the full 200 shares, even if I went in with 100 shares, to know that it could have reversed and broken through these levels pretty quickly, and maybe even with slippage, maybe I would have gotten out with a $300 loss. It just wasn't worth it to me. It wasn't worth it to me. I wanted to start with 50 shares, and I did try to add into my position as it went down. But this had a short seller restriction. You can see here on Lightspeed. Anytime you see this CB icon here, it's basically a short selling restriction on the broker. So. You know, so there were many times I did try to average in. I did try to build a bigger position, but it just continued to blow past my add-ins, and I didn't want to chase it. But you know what? I'm satisfied with it. I'm satisfied with it. As a matter of fact, I'm ending the day at $476.50 in profit because of this trade with only starting position of 50 shares. Okay, and if you look over the track record, I mean, this channel's only really been around a few weeks. And yes, I've had some losing days, and I had a pretty bad losing day even in the beginning of launching this channel. But by and large, I've been averaging roughly $400 or $500 a day. And I've had some lower days than that. I've had some, you know, $150, maybe $200, $300 days, but I've also had some $700, $800 days. Okay, so, but on average, this is what we're getting on a daily basis without having to go in with huge share size and risk stocks moving against you tremendously and having to take big losses on them. Okay, that's the name of the game. That's why this is called conservative trades. And so I won't really address TVIX just because obviously I didn't really get a significant move on that. But SFIX was the other one. And I want to break this out too because, you know, this was very whippy in the beginning. And I was in and out of this trade. I was underwater, and then I was winning, and then I was losing, then I was winning. And you can see just how it worked out here. But I noticed that this trend was starting to be made on the line here. And so at some point I went in with an average. I took profit here. I averaged back in, took a little more profit here, averaged back in, took a little more profit here, and averaged back in, again going short. And I think I had to buy it here. No, actually, I averaged in here, and then I actually averaged in again when it came up here because I had already drawn this trend line. Again, guys, I drew this, again, go check out the live stream. I drew this trend line, and I even said in the chat, if this comes up to here, I'll consider adding again. And then if it breaks trend line, then I'll just get out. But it never broke trend line. It continued to come down. So I think I must have taken a little bit of profit there, added in again here, let the trade work itself out. It came down. It actually broke through this trend line. It came back up and retested this trend line, faked out of it, came back down. I got out more here, and I was looking for a good solid move to the downside. We obviously just never got that. And so ultimately I ended up getting out here as it started breaking up through this trend line. And as you can see, when it broke fully up through that trend line and closed above that trend line in all major moving averages on the 5 minutes, it continued to make a move up. Okay, so I was not going to hold through all of this. All right, but this video needs to be a lesson on a couple things, really 3 things we'll say. Number 1, the importance of using a conservative share size with your trading strategy. Look at the whippy action here on SFIX. You know, if I was loading in with 1,000 share lots at these positions, I would have taken a lot of punches. Okay, I would have taken a lot of punches and maybe would have been down a lot more on the day. You know, you're seeing me end the day here over $76 on SFIX. But you got to understand, at one point, I mean, I'm pretty sure I was down like 90 some dollars, if not more, maybe even 100 and some. Okay, so when you take conservative share size, you're able to let the market work against you. You're able to get stopped out multiple times before the trade idea actually starts working out, and you won't be too far in the hole to dig yourself out. So that's one lesson. That's one thing I want you to keep in mind today. And even here on VIR, even if this had gone against me and say stopped me out, I would have taken maybe a $150 loss instead of, you know, maybe a $300 loss on a full 100 shares. And you know, here's the thing with stocks like this, it can break out, fake out, and then come back down. So if I was underwater $150, but then I saw it coming back down here to these levels again, I probably would have had a little bit more confidence of going in with that same 50 shares and watching the trade play out. As opposed to if I had went in the full 200 shares, I mean, if I went in the full 200 shares, I would have been $600 underwater. And I'd have been a lot more nervous when it came back down to test this line. I might have thought to myself, no, it's going to do the same thing to me. I don't know. But because I took conservative share size, even if it had gone against me and I'd gotten out $150, I know I would have tried that again. Because this was such an important level today, especially on the daily chart. This was such an important level. It was a critical level. And psychologically, even having a small loss like that would not have messed with my mind to the point of scaring me out of taking that trade again. Okay, but I took a conservative share size. I was able to add in from time to time, and took really nice profits down the way. Guys, this is like almost a $10 move. Almost a $10 move. Okay, and so it's the reason that I'm up on the day. And I do this consistently. I look for trades just like this that can make good, consistent moves to the downside, even look for places where I can add along the way so that I can continue to size up a little bit more if I want to. But it gives the stock room to work out. And even on stocks like SFIX, it gives you opportunity to get chopped out a few times, but not be so far underwater that you're not afraid to take these moves again, especially when it looks like the pattern's going to play out in your favor. Okay, that's the name of the game here. But another lesson to take is also that these areas of support and resistance are real. Even here on the SPY, again, I marked all of these lines out before the market came into play today. This was all pre-market action. You can go back and check the live stream for the 10th time. Okay, and it's no coincidence that it came down here and it kissed right on that line and came up to test that EMA. And it's no coincidence that when it finally found the breakthrough, it just flushed all the way down here to this other critical area of support, and it kissed off of that. Okay, and so these lines are telling. They are telling. It's not that they're some kind of magical movement of price action or anything. It's just that these are psychological numbers. These are things that other traders are watching. Okay, and same thing with trend lines. Same thing with trend lines. You can see that it never could make it back over this trend line and continue to move down. Yes, as it was confirming other things on the chart, as far, you know, such as breaking through VWAP, moving averages, and even breaking through this bottom trend line here. So, you know, wedges, trend lines, key areas of support and resistance are oftentimes respected. They're not always respected, but they definitely help you to be able to make up your mind on, you know, what the greater probabilities could be on any given trade idea. So hope you guys can take a little bit of a lesson of that today. And thanks again to all you guys who came in a live stream. We even had some new guys come in today. And so the channel's building, it's growing. And so I appreciate all of you who are just continuing to like and comment and subscribe. And hopefully you are finding a lot of value here. And hopefully it's even helping you guys as you move forward with building your own day trading businesses. So I'll see you guys tomorrow. Take care.